from the NDN earlier. She was all feisty on her interview. We'll see whether you do the same. But no one could be as feisty as Congressman Weiner was yesterday. He was not happy, Steve Moore, with the question about whether the estate tax was fair. And in his mind, essentially, it is fair because I still actually don't exactly know his answer.
Yeah, I don't think Megan, he ever answered your question. But let me cut to the chase. I think this is a tax on the American dream. I agree with you that if you make $2 million, $3 million, $5 million, $10 million over your lifetime, why should the government help itself to up to half of that estate? What I think the congressman doesn't understand when he says the person is dead, so they can't. The reason people build up wealth over their lifetime is so that they can pass it on to their kids and grandkids, whether you're talking about a small business, a farm, or a ranch.
That's the thing, Simon. If you're not supposed to care about what happens to your money when you're dead, why have a will? Why do any estate planning? I'm dead. What do I care? The reality is people care. They care about their kids. They want to pass what they've earned on to their kids. And the argument from the other side is, why should I have to give my earnings again to the state instead of to my own children or however I deem fit?
Sure, Megan, what I think is important to realize is that most of the vast wealth of very wealthy people, which is what we're talking about, is created through investment income. And investment income is only taxed with capital gains when an asset is sold. So it means that if you have a house that you bought for $1 million and it's now worth $10 million, right, in that estate, that mythical estate you were talking about, that $9 million of new wealth has never been taxed. It's not double taxed because it's never been taxed, actually, in terms of income tax, because it only becomes income when you sell it.
That is one slice of this. That is one slice of it. You found one sort of window that you like for the other. Speak to the broader issue.
No, it's not a little window. It's that the vast money we're talking about that's captured in the estate tax is tax that's never been taxed. And what we're talking about in the debate now with Nancy Pelosi and the Republicans, we're talking about 3,000 families in the entire country netting about $30 billion a year. I think we can find common ground between what Speaker Pelosi wants to do, what the President and the Republicans want to do over the next in the next week or so, and get out of town. That's what I hope happens anyway.
They did find common ground. That's the amazing part about this, Megan, is I'm not happy with the 35% estate tax. I think that's too high. But this was the negotiated position between the president and the Republicans, and now Nancy Pelosi is blowing it up. Now, Simon, you know you're not telling the truth when you say this money has not been taxed. When you're talking about investment income, let's talk about a stock. As you know, Simon, people don't get any return on that until after the corporate income tax is imposed. That's a 35% tax. That tax is part of what
has nothing to do with the that has nothing to do with someone's actual income tax.
Let me reset
so the money
this.
has been
let
taxed
me reset
before.
this to terms because
no,
I
it
don't want to
hasn't.
Let me reset this.
Yes, it has. It's been
because
taxed
if we get too deep in the weeds on the
level.
economics, you're going to lose folks. So I'll tell you that right now. Simon, because we reach out for talking points to the guests before they come on, so we know where they stand. And this is what you said, Simon. You said it's important the estate tax, and I'm quoting, for the common good. And then you said if the wealthy few have too much wealth, and there isn't enough for everyone else, the economy can stall out. Is that how you feel?
Yeah, I think there is both economics behind the inheritance tax. It's not a death tax. You don't pay taxes when you die. You pay taxes when you're trying to inherit it. Other people are trying to inherit the money that you have. So first of all, is that the economics make sense because vast amounts of this money has never been taxed, and I just will disagree with Stephen on this. The second point is that if there's too much, I think the American dream, the basis of the American dream is that if you work hard, you can get ahead. If too many rich people have too much wealth, getting ahead for an average person is harder. And so I think what's consistent with the American dream is the sense that we shouldn't allow vast estates like in 18th century Europe to accumulate in the United States so that everyday people can't get ahead. So I think there was both sound economic policy and sound social policy behind the inheritance tax when it was created, which is why I think the Democrats are fighting so hard to restore it.
That sounds like blatant wealth redistribution. It sounds like, just flat-out wealth redistribution.
I think it is. I mean, 2 points. One is, Megan, you made the key point when you introduced this segment. Why should it be taxed again? These are people who paid taxes every day of their life when they were alive. Now they have to pay another tax on it. But here's the other point. Look at Warren Buffett and Bill Gates. Those are the two richest people in the world. You know how much estate estate tax they're going to pay under any of these plans? Very close to zero. They've been doing the estate tax planning their whole life. Bill Gates and Warren Buffett gave $50 billion to a foundation so they wouldn't have to pay this tax. The people who get clobbered are people like my father, who built up a business over his lifetime, didn't do the estate tax planning, and now half of everything he earned over his lifetime is going to be taxed at death. I do find that to be un-American.
And it hurts a lot of farmers, too, Simon. We've heard from a lot of farmers from the emails who say they get pinched by this, and they're not millionaires by any stretch of the imagination, but when you value all their assets upon their death, their kids get hit.
Megan, we're only talking about, under the current plan that was produced by the Republicans and the president, we're talking about 3,600 families in the entire country.
That's not true. According to Congressman Weiner, he put the number at 34,000 people.
Under the old plan, under the old tax law, it was 42,000. We're dropping it from 42,000 to 3,600.
But why is it there to penalize even those people? They worked hard for their money and they paid taxes on it.
3,600 people. But Megan, just as you said earlier, by the way, remember, we have progressive tax rates in the United States. If you make more money, you pay more tax. That's the way the tax system works now. And you may determine that to be redistributionist, but that's how the system works. What the president proposed and negotiated was a tax bill that pays the same marginal rate on income, on the inheritance tax, as people pay in their income.
But
as I said earlier,
but the Democrats want a higher rate. That's what they're objecting to. They don't want the 35% rate. They want 45 or 55%. That's higher than the
45. What's been proposed and passed by the Democrats is 45%.
That's
higher
than the
3,000 families. 3,000 families.
That's higher than the rate that you just said.
I got to go because we got some
breaking
news
out of London. By the way, it only raises 1% of revenues. In the whole system, we only get 1% of our money from this tax. It's not worth it.
Okay. Well, it's a worthy debate. Look at that. We had to cut off the panel, but my thanks to them. We've got this breaking news because we're getting reports from the Associated Press now.